Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage your risk. I'm your host, Jim Matthews, reporting from Chicago. And joining me today, someone who has just returned from lovely Florida and is now back in lovely Wichita, Director of Feed Foundations, Mr. Jake Kingsley, and returning to the Grain Feed, hailing from Elmhurst in the Chicagoland suburbs, Chief Science Officer at Everstream Analytics, Mr. Mark Russo. Mark, welcome back.
Hey, everybody. Thanks for having me, Jim.
Absolutely. Always great to have you. You've been on the show a handful of times. You and Everstream, my humble opinion, some of the best in the business. So it's great to have you here. And of course, to compliment Professor Kingsley out of Wichita. Jake, how's everything?
Doing all right. It's good to be in Florida, but there is no place like home.
Oh, that's nice. And especially with the whole Kansas thing. Right? I get it. Yeah, that's super
Thanks.
nice.
Thanks for really ruining that one.
Jake, you were down in Florida meeting with some of the nation's dairy farmers, and it's a very volatile time, obviously, and we've seen that happen in the markets over the last few weeks, and we'll run through where markets closed today on Wednesday. But real quick, what was kind of the sentiments in some of those discussions you were having with folks from different parts of the country?
Yeah, I think volatility is front of mind for everybody for pretty obvious reasons, especially over the last handful of weeks here, right? We had a little bit of a break from it for part of 2024, and 2025 has been up and running. So lots of talk about managing risk, trying to take some of the volatility out of these markets while keeping flexibility and beneficial moves in the market in play for these folks. So a lot of good discussions. Tough to nail down exactly what tomorrow's going to bring, though, as I think we're seeing day to day here.
Yeah, it certainly is. And you said it very well, right? The name of the game is to manage risk against that volatility and try and remain flexible here for some opportunities in these various markets. But of course, the macro elements have made things very interesting, but we need to get back down to the basics and get back down to good old fundamentals. And that's we've got Mark Russo here to chat some weather. But first, Paige, if you would kindly timestamp the broadcast, it is Wednesday afternoon, about 3:15 Chicago time. And the corn market and most markets closed back up a little bit today, which is actually news compared to what we've been dealing with for the past, let's say week and a half. Of screens have been bright red as of late, but we did have May corn close up 4.25 cents today. That was at 4.55 3/4. Although December corn did close unchanged, didn't quite find that same recovery that the old crop markets have. So Dece is staying below 4.50 at the moment at 4.46 3/4. We got beans rallying back to at least above $10 on the May contract. It was up 12 3/4 at $10.11 3/4 today. And then soybean meal, that stubborn little byproduct. Lately, it's been stubborn on the downside. Tried to recover a bit today, but May still holding just below $300 per ton. But it was up $6.30 a ton at $299.80. So we got to keep an eye on that meal market and see if May, representing that old crop price, can remain below $300 a ton. Should be interesting. Let's talk some weather, Mark. Let's talk some good old-fashioned weather here, because I think for a bit there, obviously, I think President Trump's election, we get into a lot of the rhetoric over the winter, but I think a major factor for some of the strength and support that we did see through the markets for a bit there was a little bit of an issue down in South America for a bit. We had some delayed soybean planting in parts of Brazil, some major dryness maybe across Brazil and Argentina, but then it felt like things got a little bit better. We caught up on the bean harvest in Brazil. We've kind of caught up on corn planting. So what's our take on South America at the moment?
Yeah, absolutely, Jim. It's been a bit of a roller coaster ride here with the weather across South America going back to late last year. And what's happened is that things have kind of, moderated or normalized after what was basically one of the driest Januaries on record in Argentina and one of the hottest Januaries as well. Rain activity started to improve throughout February and now so far in March. And that has been very timely for their soybean crop, probably coming a little too late here to help their corn, especially since there was additional heat this past month in Argentina. But the more extreme detrimental weather in Argentina, that really came to an end here just in the past couple of weeks. And then for Brazil, like you said, we've seen rapid now fieldwork operations going on with soybean harvesting and safrinha corn planting. There's still some pockets of dryness around, and actually some of the dryness is more severe actually in some of their sugarcane and coffee areas in southeastern Brazil. But for the corn and soybean areas, things are okay right now from a soil moisture standpoint. A few dry pockets in around Rio Grande do Sul, but going forward, it does look like some of those areas of southern Brazil have opportunities for rain coming up. And then for the rest of center west Brazil, southern Brazil, where soybean harvesting and safrinha corn is taking place, or planting is taking place, looks like generally favorable weather, a generally drier bias here. Still could use a drink of water later this month, but they have a ways to go before anything of concern pops up.
Okay. And it feels like, Mark, I mean, the USDA was at least potentially justified to, reduce some production estimates in Argentina. And again, as you noted, the severity of January, it might have been overlooked by some macro discussions, but I think a lot of people, that was a front and center headline for a lot of us in the industry, was how rough things were in Argentina. But Brazil looked like okay. And then suddenly this picture has changed a bit. So as the second Brazilian corn crop, the safrinha crop, let's say still planting at the moment, but a pretty good chunk is caught up and is in the ground now. I mean, the next 6 to 8 weeks, things look fairly okay weather-wise, like give or take a few drinks of water, like you mentioned.
Yeah, they still have their rainy season, which will continue through the end of this month and into April. And right now, soil moisture is generally adequate, although some of the far eastern part of their belt is beginning to shift a little drier here recently. And again, there's some opportunities for rain coming up. They're going to need some more rains late this month and into early April. Right now, we're expecting generally near normal rainfall across the majority of the acreage, but we are keeping an eye on that kind of drier eastern acreage. And can they at least get enough rain in these next 6 to 8 weeks to prevent any kind of early stress during development?
We talk about how a lot of times when we're talking to folks in that bull market, right, that bull needs to be fed. And I think the South American situation was one of those items, feeding the bull, but at least for the time being, perhaps that has no longer been a major issue to kind of fuel the rally that we had sustained for a bit there in the corn market. If it's okay, let's bring her back up to North America and talk about what we're seeing, both across the plains here in the US and also then as we maybe approach some initial field work in the Midwest as well for our row crops. What have you been seeing up here in the States, Mark?
Yeah, we've been seeing some still continued very dry conditions across the southern plains, and particularly the southern part of the hard red winter wheat belt has been exceptionally dry here for numerous months. And then those drought conditions actually extend all the way into northern Mexico as well. And that's impacted the Mexican corn crop here. And so going forward, at least looking out over the next few weeks, we're not seeing any signs of any significant precip events in the plains hard red belt. And now as temperatures warm up, crop will start to come out of dormancy, and then that will increase crop moisture demands even more as we go through later this month and on into April. So definitely an area to keep an eye on here. Also for now, early summer crop planting, well, across the deep south here during the month of March. Right now, things are looking okay. Soil moisture is adequate in places like eastern Texas and Louisiana, the southern Delta region. Over the next few weeks, a generally drier and warmer bias pattern will be in place. So the start of early planting way down south looks pretty good at this time. Down the road, at least one area that has been talked about a lot recently, there's been dryness across the upper Midwest. in areas of Minnesota, the Dakotas, Iowa. That's starting to change now with some of the big winter storms that have begun to move across the area. So they're in an improving mode. We got a long ways to go before any planning is going to be taking place, but it's certainly been something that's been talked about. And if that were to continue throughout the spring, that would allow for rapid planting, but then concerns would quickly arise that it's starting to be too dry.
Yeah, and I remember Mark, a year ago or so, I feel like it was truly around this time that folks were not quite super concerned about dryness in the Midwest, but it was kind of hey, we could use some water here and there. And then when we really started getting into the full month of March and early April, it was things are pretty dry. And we saw a pretty healthy rally in the grain markets. And it was kind of one of the last hurrah there for a bit for corn futures because of how dry the Midwest was. I think fortunately we ended up getting the rains that we ultimately needed there to improve moisture. But I feel like it's never too early to just kind of keep that in our mind of, we could use a little bit here. And we've had some precip, at least here in Chicagoland, the last day or so, which has been, the kids aren't allowed to go out and have recess, and then they're absolutely bonkers at home at night, which is wonderful. But yeah, I think it's important to keep an eye, especially, and we'll talk to Jake in a minute, as we start to really approach some key reports here to indicate our planning projections for the U.S. Before we switch to Jake, any international concerns that you've been seeing for a weather issue outside of the Americas?
Yes, Jim, we're keeping a close eye on the Black Sea region. That area has been exceptionally dry now for a long time. So that includes much of Eastern Europe through Ukraine, through southern and southwest Russia, prime wheat areas, but also prime summer crop growing areas for that area as well. No sign of any significant improvement here much of this month, looking out. So that's definitely going to become a quick focus of attention as we move into April and beyond, as winter crop growth starts up and some early summer crop planning begins to get accomplished there.
Okay. All right. We'll have to keep an eye on those regions because it sounds like for the most part, wheat pricing, at least at the board, has come back under some pressure as of late, along with many of our agricultural commodities. But, when you're talking about the dryness in, the southern plains here in the States and other parts of the upper Midwest, and some potential severity in the Black Sea, there could be some risk premium potentially building up through the spring here on the wheat market. So I think it's really important to keep an eye on that. So thank you, Mark. We'll turn her over to Jake. Jake, with all this in mind, we've got the little macro alarm bells ringing almost every day, as you suggested earlier, with tariff, no tariff, tariff, no tariff, kick the can, don't kick the can. What are your thoughts, Jake, as we move closer now into some really, let's say, more important USDA reports? We got March WASDE coming up here in a bit, might give the USDA a chance to reevaluate on some of the production issues that Mark referenced in the South American region. But then what are we going to do at the end of March when we reveal what we intend to plant here in the States? What are your thoughts?
Yeah, so we've got that WASDE report coming out next week. I would expect that they give South American yields or production numbers another little bit of a haircut. I think hopefully are at a point where we've avoided catastrophe down there. And I think we're seeing that in the markets, especially on the protein side with soybean meal remaining under pressure. Export demand here domestically has been pretty ho-hum. And then, as you said, starting to catch up on planting the safrinha crop there in Brazil will help. But they did have a little bit of a dry spell that kind of knocked back that first round. So I would bet that USDA comes in and trims that up a little bit next week. And then I'll be curious if they take a stab at this tariff situation and adjust our demand picture here in the U.S. Seems like, at least over the last week or two, corn exports have slowed down a little bit versus what they had been on their very aggressive pace. Ethanol margins have not been quite as lucrative as they had been in late 2024, but futures have also come down quite a bit. A lot of corn moved while we were up there at $4.80 and $5, so it's hard to know for sure, but some of these domestic demand centers may have been able to get a hold of quite a bit of grain a little easier than would have been anticipated had we kind of not had that corn rally. We'll see how that all shapes up. And then, of course, we had the Ag Forum last week kick out a 94-ish million acre corn expectation and a pretty fluffy balance sheet. I don't know how strong the data is behind that this early in the year, but we will get a second look at expectations of those numbers from USDA's prospective plannings report there on March 31st. And I would not be surprised to see them come in somewhere close to what we're seeing from Ag Forum, just because our data tells us that typically when corn versus soybean futures for the new crop window is down here at this 2.2 to 2.25 ratio that we've been talking about for a while now, we typically add 2.5 to maybe as much as 5 million acres of corn versus last year. And inevitably we erode some bean acres off of the balance sheet doing that. So they seem to be headed in the same direction as a lot of other minds in the industry are. Then to take a step back and kind of retrace Mark's steps from south to north here, I think, again, the protein market has benefited from Argentina having fairly sizable crop. Again, they avoided catastrophe. They had a few little rough patches there, but all in all, pretty good. China's been buying from them pretty steadily and kind of leaving us out of the market for in large part. And then I think probably the dry weather in Mexico has been probably as much of a catalyst, or at least reassured these folks that they need to be buying ahead of these tariffs after they had a pretty severe drought last year and had to bring in extra corn from us. So trying to reload from that deficit and then also get ahead of what appears to be materializing now with a full-blown tariff dispute going into effect this week. So I think we're starting to see that slow down a little bit because Brazil has caught up and corn acres are going into the ground. And like you said, Mark, the forecast looks pretty good, at least for a while. And so if we get that done and we get our crop in the ground here, we could see something of a return to normal basis for domestic corn here in the U.S. We saw a pretty healthy breakdown in the last quarter 2024, and especially getting into the new year with futures pushing up again into the $4.75, $5 mark. That got corn moving and basis benefited from that. A lot of folks took advantage of that. I suspect it'll stall out and possibly even perk up a fair degree here, trimming 50 cents off of the corn market in a matter of a week or so. Not a lot of folks are going to want to be selling into that kind of a move as corn producers anyway. So I expect that'll slow down a little bit until we get confirmation of a crop in South America and then good acres expected here in the U.S. Even with that big meltdown in corn futures, still looks like it's the more favorable crop to plant for Midwestern farmers and dollars per acre return versus soybeans. So I think that calculus hasn't changed a whole lot. The one to watch, I think, is, like you were talking, wheat on an international level. And of course, here in the plains having this drought, I think wheat and corn have been jockeying for lead position in this market for most of January and a good part of February. We had a handful of headlines to move corn higher as it rallied. And then there would be a stretch where there wasn't a whole lot of new change coming in corn, and you'd get concerns about wheat conditions, and that one would run and drag corn along with it. And I think now they're kind of in a little bit of a dance on their way down here as well. So those two are going to be very heavily intertwined until we kind of get those two global balance sheets firm back up and a little confidence there. International and not so far away geographically for us issue that we're watching closely is coming back to these tariffs. Now that this is kind of really coming to fruition, we're having a very difficult time getting canola offers out of folks. We're even hearing murmurs that if they have to give you a price, it's pretty darn close to the same number that you could pay for soybean meal. 25% price increase on canola is $60, $70 a ton. And that goes into effect just as soon as it crosses the border. And 90% of that stuff comes out of Canada. So trying to figure that one out, putting on some good hedges against the soybean meal contract for the new crop year. A lot of folks are pretty well cleaned up on their protein needs through September. And so trying to remain flexible while also capturing some value while we're down here at the 310, 315 mark on futures. And that keeps you totally flexible to go back into soy or canola once we understand where this market's going to be going forward. So that's been probably the biggest change over the last couple of days, other than this corn market just falling apart on us.
Yeah, I think that's a great point, Jake. And I think it's the biggest changes that's taken place, but we also know it could change at any moment as well, which has become, quite frustrating for those of us maybe tracking these markets. But it has given us some opportunities here. So, I mean, we don't want to just trade or make decisions based on the tariff decisions that have been made. But if the market has given us opportunities, I think we were pretty active here the last 2 sessions or so. Heading into last night, let's say, it does feel like the massive liquidation event has stalled for a moment in the corn market. Meal has recovered a bit, but it's important to watch. The Mexico tariff story, just to simplify, that's a corn problem for us, right? If they retaliate on corn. The Canadian situation is a problem for canola and protein and potentially a wheat market to an extent as well. Then you've got China. That appears to continue to escalate regardless of what's happening here at home with our immediate neighbors. That is more of a soybean story. So each country is impacting very specific commodities in terms of what happens. So very important to watch and take advantage of the opportunities when the market does happen to bring them to you. That being said, excellent discussion, excellent work today to you both. Mark Russo, thank you so much for coming back to the show. We value your insights and appreciate your time.
Absolutely. Thank you so much again for having me, and all the best to everyone.
Absolutely. Awesome. Thank you. And we'd also like to thank the Everag Insights crew for their support. Thank you to Paige for production magic. Thank you to the viewers for watching the Grain Feed. Contact information is on the screen. Really appreciate your feedback. That's all for today. See you next time on the Grain Feed.